All right, I'm live. It's happening. We're going to be talking a little bit about some crypto stuff. So I'm going to go ahead and let me do a quick repost here just so that everybody knows that we're live. Boom, we are live now. Join the conversation at wrong button. Perfect. I want people to join this discussion on Discord. I'm posting a link right now. I'm going to post it in the stream chat. Also posting it in a repost, and I've put it into the feed on YouTube. So it's in the description on YouTube as well. So anybody who wants to participate in this discussion, feel free to join me on Discord. I'd love to have you join me on Discord. As a matter of fact, let me post this to a few folks. Get this thing going. I'm going to share this in a few channels because I want people to join. Oops, wrong button. Discard that post. We want to copy the link. We're going to go to some of our communities. Live now. See if we can get a few people to join us from Matt's Marketing Corner, a buddy of mine. There we go. All right. So let's go ahead and get this thing started, shall we? We are today talking about DePIN. I kind of want to take a step back and kind of look at the current trends of both DePIN and crypto, but also maybe differentiate, what is DePIN doing for Web3? Like, how is it different from like the traditional L1, L2? So we'll get into some of those discussions. Before we get too far down that rabbit hole, though, I just wanted to take a look at a few things of what's going on in the crypto space. Those of you that are following, first of all, I'm not a financial advisor. None of this is financial advice. All I like to do is just kind of look at the trends and identify things that look interesting to me. So the first thing I wanted to take a look at was coin market cap, and just keeping it very simple, right? If we go up here and, for the last 24 hours, we've been seeing a lot of red, and we might be asking ourselves, what's going on? Let's just always zoom out. I like to look at the market, total market cap, and see what's happening in the entire market. So I always like to back out to this screen here. Actually hide the background box for chat because we got chat over there on the right. So if you do chat, hey, DePIN Crypto Network, welcome, brother. Hey, hop into the Discord and join us. I'd love to have you come in and talk as well. You can just hop right into Discord and start chatting with us. But if we take a look at this right here, a few things stood out to me. Like if we just look over the last few days here, look at that total volume, 340 billion, 380 billion almost. And we go back and look back in history. When was the last time we had that much in volume? So what this means is there's lots of trading going on with a net negative, but there's still a lot of activity. So obviously it's a net negative because it's going down in total market cap relative to a few days ago, but that's a lot of trading volume. So if we go back and we look at trading volume, we had the hype about a week ago, maybe 2 weeks ago, and we were getting up into the 365, 370 range. But really, I mean, we're just going back here and looking. I think there's a spot way back here. We were at like 300 billion. Yeah, there we go. So we had 300 billion back in November. And then obviously, if you break it out and you kind of look at it historically, you can see that the different volumes down here, right? So we can see that the volume right here, we spiked here, boom, in the 300s. Even way back in, well, let's even go back even further. Where is our highest historically? Like 320 billion? Is that really our highest way back in 2020? Oof. Okay, so yeah, in 2020, 300 billion. Like today we're at like 380 billion. So I just keep that in mind. There is more volume in transactions going on today than I think ever. Again, net negative by a little bit. I don't like to extrapolate on too short of terms. I generally ignore the 1 hour changes, but if we look at the hourly changes, everything's going green on the hourly changes. So crossing fingers. We'll see what happens in the next 24 hours and in the next 7 days. I tend to like to look at longer cycles. 7 days is kind of a good baseline to see what's going on. Um, and I'm not one of those people that like just jumps on the hottest thing. I know some people, they'll look at these and they'll go, okay, uh, you know, this BitGet token number 39, I'm going to go jump on that right now because it's trending over a 7 day period. Or some people might even go crazy and just say, hey, in the last hour, I'm just going to jump on anything that had like a major dip in the last 7 days and is starting to turn around in the last hour. Fair enough. People chasing their dreams. I'm all for it. That's not really my cup of tea, but do what you're going to do. Anyway, I just wanted to add perspective. I like to always like back up and kind of look at the big numbers and just go, what's going on? We're still at a higher market cap really than we've ever been. So even looking back, historically speaking, yeah, look at that. Market cap was 2.8. I remember saying it was like 3 billion back then because we were getting close. But really, we're at a higher market cap than we've ever been. We have more volume in the last 24 hours. Sure, markets are going to go up and down. We're just before Christmas. Speaking of which, we were going to have like a whole DePIN mastermind thing today. And unfortunately, people got sick. So Brandon and his family are dealing with an illness. We had a guest lined up who also is dealing with an illness. So we ended up canceling all that. And so I'm just kind of like looking at the markets right now, looking at some of the news around DePIN, understanding where we are. And I always like to zoom out and look at the bigger context and figure out, where we are. So I still think we're in a great spot. Obviously the index, the fear and greed index is still on the greed side, right? So still fairly positive. People are arguing that now we're moving into an altcoin season. We're probably going to run into an altcoin season in through early 2025. I don't want to make any predictions about that. We'll see how this all plays out. I do love this page though, in general. I like to see what's going on in the index, fear and greed index. This is always interesting when you see like the fear and greed cycles as they associate with the Bitcoin price. So always cool to see when the greed goes up, Bitcoin pumps. Fair enough. The question is always which one's lagging and which one's leading. Is the fear and greed index the leading indicator or what? And it's usually pretty close when we start to see those things. But I obviously don't get too deep into those things. One thing I do want to talk about though is upcoming regulation. Ooh, good point. Hey, DePIN, thank you for catching that. I did actually do that on purpose on Discord. I muted it. And you know what? There we go. So we are streaming. You should have microphone on Discord now. DePIN Crypto. Thanks for joining. And by the way, feel free to unmute and chat if you ever want to jump in at any point. It'll capture your voice, or should capture your voice as the desktop audio. So anything you want to add, DePIN Crypto, while I got this thing going? If not, I'll go ahead and jump into the next thing here. This is an interesting one with regard to regulation. I'm not quite sure how this is going to go. Some of us have heard this over the last month or so. Some discussion around maybe creating crypto tax havens for projects that start in the US. I think there's going to be a lot more nuance to this. I've seen some discussion around this, being that there might be a capital gains tax break or tax haven for projects that are innovating in the US. So if you remember, Trump was talking about all Bitcoin being mined in the US. That was a funny comment for anybody that understands how Bitcoin works. But what it does show is a commitment to making the US more accepting of crypto projects, which is very promising. So I don't want to read too much into this. I think there's going to be a lot more nuance into this. Having seen some of these types of regulations go through, there's probably going to be some challenges. But even if they were to say, listen, you have to meet a very specific criteria, but if you meet that criteria, being maybe you have to innovate and you're not just strictly a token project, you have to be a US based company. I could also see them putting limitations on companies moving to the US. Maybe you have to have a certain number of US employees, and that has to be a certain percentage of your company for you to qualify. I think about like Tashi, our entire engineering team is in the US. So this could be very, very meaningful for us. So looking forward to that type of stuff. Anyway, I'm curious of what other people are thinking about this when it comes to some of the regulatory movement. We don't know where this is going to go just yet, right? This is all just, there's some rumors floating around. It sounds like it's going to be positive for all of us in the crypto space. I'm excited to see where this goes because what I really want to see is that innovation. One thing that the U.S. is really good at is in innovating, and even innovating in the light of regulations. So a lot of other projects in the U.S. and outside the U.S. There's always going to be your bad apples, but there are a lot of projects out there that really aren't bringing any real value to the Web3 space. They're launching tokens, doing whatever they're doing and raising money, but they're not really delivering on anything valuable to the audience, to the users. And this kind of brings me to the DePIN side, right? I was looking at some news about DePIN and thinking, what DePIN got wrong and how to fix it. And so in this argument, this is an opinion piece, of course, but it's a lot of DePIN projects are really focused on tokens, isolating themselves and siloing themselves in their own token economy. And then there's always a question of like, how do we incentivize appropriate behavior within an infrastructure network? And then there's some discussions here about how to rethink DePINs and stuff like that. There are other articles that are talking about unlocking the power of communities and how we're talking about new economies based off of DePIN. And this is something that's very near and dear to me. I know Brandon and I have talked about this a few times, Brandon from Conduit, of course. And so lots of discussions about how we're going to restructure token economies and how DePIN plays like a real role in that. Yeah. Okay. This is the Masari report. This was back in August, right? So this is the one talking about early stage fundraising. This was back in August. So they're talking about year over year, 296% growth in DePIN early stage funding. That doesn't mean a whole lot if you're coming from nothing to something. So, it was another DePIN article that popped up. And so I wanted to take a look at it. But what I do want to take a second to do is kind of differentiate between DePIN and L1. So I'm gonna get real scrappy here, guys. We're just gonna keep it real simple. I'm draw some things here, but if we just look at the entire like crypto space, right? You have your L1s / L2s, and these are really general purpose networks. And you have a bunch of your clients that sit out here, and the clients are talking to the L1s and L2s, and the L1 and L2 is basically all the little nodes that sit in there, right? So if we get all these L1, L2 nodes in here, and these are really general purpose nodes, right? When we look at Ethereum or Hedera or Solana or Cardano, these are general compute nodes. You can write whatever logic you want on it. It's useful. One of the challenges of this is just performance. Quite simply is performance and cost. So when you have tens of thousands of nodes, you have to come up with a fair way to distribute the cost of maintaining this ledger, maintaining this infrastructure here. And you also have to reach consensus over a larger group. Now, there are certain projects that are getting creative with that. Algorand has its whole verifiable random function, VRF, protocol for selecting who's going to be the next validator, but then they still go through kind of like a vote or proposal submitting and proposal validating process. Cool. It's probably faster than the way we were doing blockchain before. That's great. Solana is relatively fast. There are lots of projects out there that are pretty fast. Hedera is probably one of the most trusted, I would say the most secure protocols when it comes to reaching consensus in a trustworthy way. The Hashgraph algorithm really is a 2/3 voting protocol, and it's mathematically sound, and you get actual finality with a probability of 1, of course. And so you get some cool things that come out of Hashgraph, but with Hashgraph, there's also like the scaling latency. As you get much larger networks, you end up slowing down the network and the consensus process. And there are things we can do to optimize that. There are algorithmic optimizations we can make. There are hardware optimizations we can make. But really one of the challenges we have is the time it takes to reach consensus for all of these protocols. We're talking in seconds, right? There are a few out there that talk about half-second block times, but then you need confirmations for blocks to be trusted. And that might only be 6 blocks. It could be 30 blocks, depending on what network it is and who's doing the trusting and how risky the use case is, right? If you're just doing gaming, maybe half a second is fine. Um, but I would argue that half a second's way too long to support any real-time game. And that's one of the reasons why we went after the gaming space as Tashi, is we're looking at this going, um, in the gaming space, 1 second, 2 seconds, even half a second is just too long, too much latency. Half a second being 500 milliseconds um, in between turns. There's also a problem here is that all of these, we'll go like that, all of these cost money. There's gas involved here, right? So you got to pay. And fair enough, right? You're asking a bunch of other people's computers to solve a problem for you. So there's a few ways to solve this. And DePIN Crypto, if you ever want to just jump in, just like, I don't know if you can raise your hand, maybe throw an emoji up or something like that, wave or something, and then I'll pause for a second so you can make your comments if you want. But you're more than welcome to join in and have and participate in the chat. I'd encourage anybody to jump in. So if you're watching this and you want to participate in the discussion, jump into our Discord and you get to join the live voice chat right now. So I'm trying something new, but I think it's good to just have these more as discussions. Right now, I'm just kind of going through and just talking about things that are important to me and that I am observing about the space. But absolutely love to have some more input. So did you want to say anything, DePIN Crypto? I'm not getting any audio off of you. Maybe the microphone's not working in Discord. Sometimes Discord likes to mess with my microphone, my audio settings. Sometimes it makes it my my HDMI monitor. And I'm like, no, I've got a microphone. I got a dedicated microphone for this. All right, so while DePIN Crypto is figuring that out, let me go ahead and let's differentiate this a little bit, okay? So let's do a few things. Oh, look, because we have comments in here. Let me put that background back up. There we go. That might be easier to read. Okay, so let's talk about the differences here. Okay, so with an L1, L2, you've got these parties right here, and their focus is on a more of a general use protocol, right? And you got all these clients. Come on, let's grab it. Get move. There we go. So we got all these clients everywhere, right? And they're all using this. Boop. Boop. So everybody's using this network of nodes, right? And these network of nodes, it's usually like a mempool. There are also indexers in there. So there are ways to submit transactions. So you're using a mempool maybe to submit transactions with an auction for some gas. So you're basically saying, hey, do this thing for me and I'll pay you some money to do it. So execute the smart contract transaction or execute this transfer transaction. And here's some utility token. And every network really has one utility token, right? So if we're talking about Ethereum, we've got Ether. If we're talking about Bitcoin, we've got BTC. Hedera has HBARs. So you've got your utility token that you need to run on that network. And so great, that's awesome. And different protocols have different ways of like managing the value of that token. So some projects are going to have like a pegged value of the services. So like Hedera pegs its service costs to USD, even though HBAR can fluctuate. Real time, when you're executing transactions, the transaction cost is calculated, I shouldn't say real time, within an hour. I think they update the pricing schedule every hour. The cost of that service is calculated in USD. And then translated, there's a conversion rate to HBAR, which becomes the cost of executing that service. The cool thing about that is if I buy HBAR just in time, JIT, if I buy HBAR just in time to execute a transaction, I'm going to be paying pretty close to the USD cost of that service. The challenge is if I buy a bunch of HBAR and the value of HBAR goes down, I can buy fewer services if I'm holding on to it for longer periods of time. If I buy it just in time, I can very accurately calculate the cost of using Hedera. if I buy it and kind of hold on to it and then use it over a period of time, so say I buy a big chunk at the beginning of the month and then just stick it in an account and then just execute transactions throughout the month, if the value of HBAR goes down, I get fewer transactions by the end of the month. And that's a problem with a lot of networks and how they work. But these are general purpose networks, relatively slow for real world use cases. There are certain use cases where it might be fine. I know a lot of projects use the visa processing requirement, the time requirement, to justify their latency. So like 7 seconds is like a hard cutoff for financial transactions because at 7 seconds, that's what the Visa network is trying to achieve. Okay, so now let's talk about DePIN. DePIN is very different. So in this case, where you've got all these little nodes here, right? Those nodes are part of this network, and they're all fighting to calculate consensus or participate in voting and earn a reward, whatever the case may be. Really, what those are actually DePIN compute nodes and storage nodes. We don't think about it that way, but in DePIN, we think of like you've got this resource layer here with all these resources that are managed by individuals. And then you've got like this orchestration layer here that does things like routing and validating, right? And so anytime you have a client that comes in and is like, hey, I want to use this service, it's going to hit this routing and validating layer. And this routing and validating layer may be made up of its own set of nodes, right? It's got its own network here. So if we look at like what Aether's doing, Aether's selling their checker nodes, right? So that's a validation role. Let me see if I can grab this. Boop. And let me grab, there we go. Just trying to put a few more in here. There we go. Yeah, so with Aether, you get to buy these, the checker nodes, and the checker node's responsibility is the validation part of this, right? So there's some routing that's happening, and the router is then going to go through and say, okay, I've got this job coming in from a client, and I'm going to issue that job to this service. Okay, that's one way to think about it, right? And then the service is going to turn around and issue the job completion. Then it's going to get validated, and this party here, this client, is going to pay for that. They're going to pay whatever that cost is. Okay. In other use cases, there are certain use cases where these nodes are just constantly feeding data in, and then the orchestration layer is kind of compiling, abstracting, maybe even sanitizing the data, and then offering this as like an API of some sort, right? So this would be an example of like what GeoNet is doing, where you've got all these sensors out in the field. Hey, Tony, welcome to the discussion. We're going over the difference between L1, general purpose L1s, L2s, and DePINs. So Tony, but you're welcome to join in our discussion. I've got in Discord, we've got a channel called Game Room. You can hop in and just participate in the chat. Here, let me post that Discord link in here again, if you wanted to jump in with us. Okay, so let me move this over a little bit so it's not in the chat bubble. There we go. So you can still read the chat. Okay, so hey Jordan, how's it going? You feel free to hop in too, Jordan. If you want to just jump into the chat, you're more than welcome to jump in. I want to get as many people in the discussion as possible. I'm okay talking. I don't mind talking and kind of going through this and kind of like techno puking my ideas out. But it's just so much more rich when I got somebody here to kind of challenge me and maybe even add some color to it or some context. So please do, if you're listening to this and you're able to, hop into Discord and join the chat. Okay, so when we're talking about DePIN, there's a few different models of this, right? This one right here is kind of like the GeoNet model, which is you've got nodes that are just feeding data, and then you've got kind of this API, and then people pay for this API data, and it can be very lucrative depending on what you're doing, right? If we look at what Helium's doing this from the perspective of extending mobile telco networks, right? Mobile networks. And so if I've got, say, and they actually have a whole mobile service and everything they're doing around this. There's another one that recently we talked to that's doing specifically the devices, which was kind of cool. But the idea is they're extending services. So there's usually a purpose to DePIN. So DePIN usually starts with a use case. We're going to put that here. DePIN equals use case, right? There's usually a use case you're starting with, and that use case usually has a business. Ideally, the argument is, we'll even put a question mark here. Is there a business? Is there a business?
That so is true.
Oh, there we go. DePIN Crypto, you're in now, huh?
Yeah, I had to switch over to my mobile device because my laptop was not cutting it today.
Oh no. Hey, thanks for
But
joining
anyway,
though.
yeah, I was gonna say. So far though, I really like the explanation. But as you kind of like dive into this, you're exploring new use cases. The interesting part is how dynamic the networks tend to be in DePIN, and it kind of makes sense why we're seeing like peak and conduit and things like that kind of show up, and how and even to just exploring like helium and
Yeah.
aether, like what they're doing it's very interesting, very fascinating.
Well, so tell me what you mean by dynamic, because I'm that's an overloaded statement for me,
Oh
and
yeah.
I can go off on
uh
that.
Not, I was gonna say a little less standardized, a little less, I want to say a little less centralized. That might be the better way to put it.
Yeah.
Yeah, so that might be the best way without going
Well,
too much into detail.
yeah, and I think fundamentally we can think of as like L1s and L2s as a type of DPIN. Like they are a type of DPIN. We don't always think of it as a DPIN, but they're very general use DPINs. Now that being said, most DPINs we have out there have a specific use case, and they've got a specific business model they're chasing, and they've got this structure. So it's almost like we always think of L1s as being the solution looking for a problem, right? That's the L1 L2 approach. With DePIN, we've got a problem plus solution. That's usually how we're looking at this, right? How do we actually take the solution? Now that being said, there's always a question about viability, right? You can always argue, is helium a viable project? And people make that argument all the time. They say, as soon as they become threatening enough to the like incumbent telcos, why wouldn't the telcos just replicate it? Like, what's the defensibility? So there's always that argument, and there's probably great arguments of why they wouldn't do that, right? And if we had somebody from helium, they could probably make that argument. Um, but the point being is that helium is trying to solve a very specific problem, right? And they've got a business context, and they've got customers, people who are willing to pay for the service. They understand the size of their market and what the opportunity looks like. So if I look at Tashi, for example, if we just look at what we're doing with, we'll even just say cloud computing for gaming, right? $35 billion. I know what my market size is. I know what I have to do from like a serviceable market size. What is the market penetration I can get, and what size of business I can build. Like if I just look at offsetting the cloud gaming infrastructure business by even 1%, we're still $100+ million company, right? So, um, and I say that because we're adding efficiencies in there. So we're not getting, we'll probably, the idea is that we're adding a 50% efficiency. So it's like if you're to take the 35 billion, cut that in half, and then take 1% of that, right? So the argument for us is I've got a clear business that I'm going after. There's a market there that's willing to pay for the service. How easy do I make it for them to consume? And then how do I build this? And maybe that's where Peak comes in, right? And even Aether. Like Peak's job is to say, hey, you've got a use case. Let us be the platform that let us handle all of this infrastructure, all these infrastructure pieces, and you guys focus on the use case. You focus on the problem and the solution, and figuring out your market and your go-to-market strategy. And that's kind of Peak's business, right? I think they've done a good job of positioning themselves in that way. And we love
Well, they've
Peak. We're
definitely done. I was gonna say
what?
they've definitely done a good job of marketing it. Um,
Yeah.
and so a lot of what like Tashi, uh, and what, from my understanding, is the ability to take a device and operate it as kind of an end user, but when you're not operating it, you'd be able to act as on the orchestration layer and earn rewards that way. Correct?
Yeah, so there's a few things that we found out that just like organically fit for Tashi, right? So if we look at Tashi, our client, this is a gamer, right? So our first client's going to be a gamer. Now the question is who's going to pay the fees for this network? Because game developers and publishers are already paying that fee, it's going to be publishers that are going to be paying this on behalf of the gamer. So in our model, we don't even expect the gamer to have a wallet that they're actively engaging with unless they opt in for that, right? But the argument here is that, okay, this is getting paid for by the dev. And so the gamer is just playing the game. So the gamer is the consumer of these services. Now, whether these services are chat, lobby, leaderboard, real time consensus for games, which is kind of our core service, right? So if we say these are the services that the gamer is getting, what you're pointing at is okay, cool. When I'm not playing a game, I can also become a resource node. So this is the resource node, which equals a gamer, right? So we'll say that. Let's see if we can make this small. There we go. That looks better. So in most cases, in most DPINs, your consumers and your resources are two different things, right? Or your providers or your operators or whatever you want to call them, right? Your operators, your providers are separate from your consumers. And so you've got two sides of the market you have to manage. In our case, our resources can also be our gamers. Now, in the early phases, our resources are going to be the Web3 community. It's going to be potentially data centers. It's going to be third parties that want to contribute resources and be compensated on that through our node licensing model. But the reality is like if you've got a game running Tashi consensus, you've already got like 80% of the source code necessary to run a resource node. Obviously, there's things like key management and token management. So all of those things that have to happen additionally, building validatable proofs that get passed up and providing these specific services. But that being said, maybe to your point, Deep in Crypto, in our case, we really have one audience. We got gamers. Now, developers are who we're talking through, but the gamers potentially become both the consumers and the producers of the resource that we're generating in our DePIN model. So it actually gets significantly easier to go to market with it, especially considering there are different ways that we can help developers communicate that to the gamers themselves. Like most gamers don't care about earning crypto. And I think that's one of the big flaws in the vision of Web3 gaming is that in the Web3 gaming space, we love to earn crypto. We'll go out and we'll grind for crypto. That's fine. We're a bunch of crypto degens. That's what we love to do. But the vast majority of the gaming world, as soon as they see a crypto component in their game, immediately get turned off because they're just like, oh, this is going to be a pay to play. This is going to be something where, even the pay to earn, where the quality of the game is going to suffer because the focus of the game development is on economics and not on gameplay. And that's been a big challenge. What we're saying is like, no, go be a game developer. By the way, game developers, we're going to give you the same services that you're currently paying for in the cloud, but we're going to give it to you at a discount. And we're also going to create a potential for adding a revenue stream for you as a developer in USD, right? Our focus is on USD. That's another big thing to think about here, right? Most DPINs are trying to figure out how to do this in in a stable coin way, right? So if we look at what we're doing, we've got Tashi, and then we've also got Itashi. And Itashi is what lives here in our network, and Itashi is a type of stablecoin. The reason for that being is a couple things. One thing is when I'm a business owner, I want to be able to predict like what are my costs going to be for this network. So there needs to be a stability to the value of the services on the network. And so as a developer, I'm going to pay probably in USD. I'll put a credit card in, and then we have credit card partners who convert that into Itashi, which is a stable coin. And now users will be able to use Itashi on our DePIN network, which means that the resource nodes are going to be earning Itashi. Now, we also have this Tashi thing over here. And some of the things we've been toying with is the idea of like, okay, how do I get Itachi back into USD? And there can be a few ways to do this. One way is to say, hey, listen, as long as you're using Itachi in our ecosystem, it's whatever the value is. So if you're a developer and you're earning Itachi because you are incentivizing your players to also be resources, and now the developer and the player are earning Itachi, anytime a player plays a game, the priority is for them to use their own Itachi balance to pay for these things. And the secondary level is that the developer is going to use their Itachi balance to pay for these services. It's kind of an ecosystem of compensation. Now, obviously, there are going to be people in this ecosystem who aren't gaming, who are going to earn Itachi. And so we've created more than an ecosystem, we've created an economy. We've created an economy where value comes in USD initially. And as the entire economy grows, we're going to add more USD value. So as the technology becomes more valuable, that USD value comes in. And Brandon and I have talked about this in the conduit in our DePIN mastermind stuff. The idea that we're growing the GDP of the ecosystem. So with Tashi, that Itachi gets to cycle through multiple turns in the Tashi ecosystem because gamers are going to earn it potentially, as players are going to earn it potentially as they're participating as resource nodes, and then spending it for their own games. And they don't even see it, right? It's all happening in the background. Developers are earning it, and they're earning it because they're referring their players or they're assigning their players to be resource nodes or encouraging or incentivizing the players to be resource nodes. And then those developers are going to use that to offset their infrastructure cost. Additionally, we think that we don't have to operate on such strict margin or such big margins as say the cloud infrastructure space does, because the resource nodes only are paid if they satisfy a job. So we can operate on much thinner margins. We're optimizing the economics of cloud infrastructure by moving it to the edge. And we don't have to pay out, or I shouldn't say we, but the protocol doesn't have to pay out unless the resources complete jobs. So there are efficiencies added. There's an economy that happens here. If the player wants to opt into the crypto side of it, they can pocket their Itachi. Okay, cool. Itashi's moving through the ecosystem. What if I want to get Itachi out as USD? Because I got to pay my bills, right? I got to pay lighting, I got to pay payroll or whatever. The short answer is you could theoretically say, well, since Itachi is a stable coin, I'm going to take it right out as USD and I'm going to go do a thing, right? I'm going to go pay my things. One thing we've been toying with is like if you convert it into Tashi, which is the coin that will be listed on exchanges, if you convert it into Tashi, then it's just a one-to-one conversion. If you want to pull Itachi straight onto USD, there's might be an exit fee in there, right? Kind of a tax, if you will. And the idea with that is we really want to create this flywheel between supporting the project and governance and all of those things that come with a Tashi token and utility, which is the economy of the actual DePIN in Itachi. And so there's this kind of this flywheel of value between the two. And at some point we'll publish what that flywheel looks like and what the entire tokenomics look like for Tashi. That's coming out pretty soon. It's going to happen probably in the next month or so. Some of the things are slightly shifting given the current economics. What we're trying to do right now is figure out how do we there's a few goals, right, for any project. The first goal is we got to have enough runway to get to profitability. That's the first goal of any project. So we're going after investors, traditional investors, but we also want to offer the opportunity for those that can participate in the token sale to participate, which would be another means of raising funds. The node sales, interestingly enough, we're having some discussions about node sales, and I won't get into too much detail about it, but let's just say that there are some opportunities to reduce the friction for people to get involved in the node sale and start earning Itachi fairly quickly. So I'm not going to get into too much more detail without getting myself in trouble. But the point is we're exploring some other ideas of getting nodes out, because really if you look at, if you're familiar with like a business canvas, right? In the business canvas, we've got key activities. One of our key activities is getting nodes evenly distributed throughout the world. And we've got some cool business strategies I'm working on behind the scenes with that as well. But one of our key activities is getting nodes distributed throughout the world. because our core value proposition is that players will have a service that is nearby to them to render that service with as low latency as possible. And for that to be a reality, we need to have nodes everywhere in the world. I'm talking in every nook and cranny and crevice of the world. We need to have nodes. So, how do we incentivize people to get those nodes out? So, we have to reduce that barrier to entry, reduce that friction. So, when I say node sale, I think there are going to be some interesting announcements coming out in the next month, month and a half that will address that concept, because our key activity again is getting nodes out as much as possible to the whole world. And there might be a period of time where it's more beneficial to get in early because we're helping to satisfy that requirement, that KPI, which is going to be how much of the world do we have low latency access to? And we've got some metrics we're putting together. And so we're going to put out a bunch of documents and white papers over the next month and a half, 2 months, documenting a lot of this. But hey, Tony, I see you in Discord with us. Welcome, brother. Always the handsome picture there. I'm not hearing anything from you, Tony. I wonder if the mic settings are wonky. All good. All good. Okay. So I'm talking a lot about Tashi, but you know, we can talk about DePIN in general. Funny enough, I kind of think of, and this is how I talk to a lot of people, I think of L1s and L2s as basically DePINs, but where the use case is a general use public ledger, and maybe even have some programmability built on top of that. So some logic built on top of that ledger. And this is where things get exciting with what Conduit's doing. So maybe a quick little side quest here. When I look at what we've done so far in the Web3 space, um, I think of it like game emulation, right? And I think I brought this up in one of our DePIN masterminds previously. Of in video games, think about EmuDev, emulation developers or development. In EmuDev, we took like the old NES or the SNES or Sega or Game Boy or GBA or whatever, and we emulated it, meaning that there were chips that ran all the logic for that gaming system. But because we can't run on those chips in a virtualized or emulated space, we have to, because we don't know what hardware it's going to run on, we have to write code that emulates the hardware. So we've got a hardware layer. Actually, let's just draw it out here, right? So we've got like a hardware layer here. And traditionally speaking, you've got a very thin software layer here, and this is the game, right? So this is, if we think about an NES here, we'll just say an NES. All the hardware is the NES, right? And you just had to write a little bit of code to make a game, and then the player could play the game. Well, now what we're doing is we're basically saying, hey, we do have hardware, but this is we'll call this commodity hardware. So this is just your PC or your mobile device or whatever's there. But actually, we're going to take the big square here, our big rectangle. But we have to emulate the NES's hardware. So we're going to call this hardware emulation. We're going to say this is the NES emulator. And then we can run the software on top of it. Okay, so something you want to notice here. Notice that there's a lot more going on here. So this is actually a software here as well. We'll just put that here. So we have this commodity hardware. We have this big stack of software that emulates this hardware here. So if we think about where this comes from, this is what we're emulating. And then the software, that this is the same game that's written up here. And so you can get like ROMs. So you have these game ROMs. So this is what we've been doing, okay? So let's think about this in the context of what we're doing in blockchain, right? So historically, if we think about what we did in hardware, and I'll even go back to like what we used to do with communication devices in the army, right? So you have hardware, and we'll call this our cryptography layer, right? So we had these old, I can't remember what they are. Singar, I think is what they are. I have to look up to see what that is. But okay. Um, but we had these old Singar radios. I don't remember if that's how you spell it at all. Don't hold me to it. If, as a matter of fact, Singar radio. See if I'm Syncgar, single channel ground and airborne radio system. Singars. Okay, so let's put that right. Syncgars. I don't think I've ever said it right then in my military career. So you have this thing, Syncgars, right? So these are hardware devices that have cryptography built into it. And what we used to do, I was in a communications unit at one point when I was in the army. And what we would do is we would actually go to every radio in our unit, and we had a little device we'd plug in, and it would synchronize the clock and the seed. And then we could just like go to every device, and as long as the batteries were good and we had redundancy on batteries and all kinds of stuff, that thing was recalculating a key, a shared key between all of the radios multiple times a second. So when we were communicating over these radios, all of our communications were encrypted. And so it would affect frequency and the cryptography and the encryption of the message and all that stuff, right? But it required very specific hardware. We had to have not just the hardware itself, the radios themselves. We had to have these keys that would synchronize across all of the radios. And then we'd have our communications, right? So we'll just call this our, we'll say this is comms, right? Similarly, what we've done in the Web3 space is we have hardware, but it's commodity hardware, right? Granted, we've built ASICs and stuff like that that do stuff very quickly. So awesome. But it's still commodity hardware, meaning that it's doing a specific task um, to satisfy a different piece here, right? So if we go up here and we say this would be another layer of software, and this is where a lot of our, and this is exactly how I think uh, about how Web3 works. So this is going to be your consensus engine, consensus protocol. This is going to be your ledger. This is going to be your validation protocol. You know, it's going to be all kinds of stuff, right? So um, this right here is the emulation. This is stuff that traditionally could happen, at least the consensus part, some of the cryptography and consensus part could happen on the hardware level, like you would back on the old sync cars. But now we have to emulate it. And then on the very top of this, then we have like all of our use cases, right? This is our, you could say EVM, use cases, all that stuff. So now we've got all of this stuff. But look what happens here is like we've got a bloat of software here. We've got a ton of software that has to be loaded. And this may be much bigger, right? This might be a much bigger burden than I'm making it out to be because you've got commodity hardware trying to do a bunch of stuff down here. And this is going to include things um, like zero knowledge proofs, right? We created a protocol. Okay. Deep encrypted, you're getting a little bit ahead of me there, but you're right. We'll get into what DePIN crypto is saying here in just a second. But so this is basically what has happened, right? So we've always had this capability of doing cryptography at the hardware level, but they were very purpose specific. Like you had to build things that solved a very specific use case. As soon as you say I want to solve a more generic use case, and I want to include communities, I want to build ecosystems, decentralize this without going to everybody in the world and saying you have to buy this specific device to participate. Now we can say, hey, listen, we're going to actually emulate all the stuff that we would do traditionally at the hardware level. We're going to emulate that in software, which means now your commodity machines can participate in this this use case, whatever this thing is. And then on top of that, we can build all kinds of cool use cases, right? But there is this burden right here, the software burden of emulation that's happening. Okay, that all being said, why does this have anything to do with DePIN? I think the reason why I'm bringing this up is I'm seeing a lot of, take this and we went from hardware to emulation. I think we're seeing a lot of coming back to hardware level. And why I say that is we now have a lot of tools that we didn't have even 10 years ago. 10 years ago, we didn't have, well, 10 years ago we might have, but 20 years ago, we didn't have things like secure enclaves. And secure enclaves don't solve everything, right? That just means that we can create secure pipes over which we can share information or share compute or perform some processes between multiple parties without anybody listening in and knowing what's going on. And even the machine on which the compute is happening outside of that enclave isn't aware of what's going on inside that enclave. So we got things like secure enclaves. Um, we've got uh, what else here? Oh, I mean, we can synchronize clocks. So if we can synchronize clocks, which is that's a hardware problem, right? But you can develop clocks that stay synchronized in hardware. And so this is where Conduit comes in, right? So Conduit's building these devices. They've got the core module, and they've got their secure module, and they've got their network module. And in those, they've got these synchronized clocks. So now we can take a lot of that stuff. Now, in that case, it does require you buying a piece of hardware to do a thing. But the point is like we're taking a lot of these primitives that we've learned about over the last few years in the Web3 space, and we're able to push them down into the hardware level. And what that means is we can now take this kind of light software layer here. And by the way, with synchronized clocks, you also get things like synchronized data and deduplication and um, ordered messages and all kinds of fun stuff, right? So then you can throw things on top of it. This is the use case level here, and it's not going to be EVM, but we can use like traditional business technology that benefit from this hardware functionality. So we can do things like take business process management tools. We can take rules engines. We can have databases and stuff like that that leverage the hardware level here. So this is kind of the evolution of DePIN that I'm seeing is like what we've seen in Web3 so far has been a lot of this. It's a lot of this software stuff. And what we're doing actually with Tashi, this is why Tashi and Conduit are such a good fit, is Tashi actually provides the consensus capability for use cases that the hardware level wouldn't be useful for. So you can almost think of like we can squeeze Tashi in between here, in between some of these business applications, and we can provide, because of that, we can provide consensus between non, what would you call it? Like non-compatible PCs or devices. So if you say you have devices that are not compatible on the hardware level, we can make them compatible via Tashi. So I don't know if anybody's seen this discussion yet. This is something that I know Brandon and I have talked about, but here basically what we're saying is, if we move things to the hardware level, we now get efficiencies and less friction for very basic business use cases on top. And where we are trying to interact with non-compatible devices, Tashi can play a role, can squeeze in between and provide that consensus layer that now enables a type of compatibility via the Tashi consensus. So that all being said, right? Obviously in Tashi, we want to be a general use consensus protocol, providing multiple services to the gaming space. But this is kind of the evolution of Web3 right here, right? So if we look at this back here was like pre-web, web 1, web 2, right? That's all the stuff that was right here. And then up here we're in web 3. This is kind of like, we'll call this like web 3, we'll call it v1, right? And I hate calling this web 3 because it really is like all of this stuff here, business process, rules engines, databases, that's all been around forever. That's not something we're inventing. What we're allowing them to do is stay synchronized in a privacy preserving way. As a matter of fact, I know we had a discussion previously where even like zero knowledge proofs add a certain amount of trustworthiness on top of secure enclaves. So if you can do secure enclaves with ZKP, we now have secure enclaves which ensure that there's no leakage of compute in movement. But then we can also provide proofs that we can now provide that proof outside of the hardware itself so people can validate the proofs themselves. Anyway, so there's some cool benefits of adding ZK to secure enclaves. And what would be really cool is if we can figure out how to do ZK at the, I guess we're already kind of doing it at the hardware level, but bake that into the chips themselves. But this would be like Web3 V2. So everything on this side over here is kind of that Web3 V2. DePIN Crypto, you want to, got anything to say? I'm kind of going off here. I know you've been typing in Discord too, and I appreciate that. But anything you want to add? Or Tony, I don't know if you've got your mic fixed at all.
No, I thought that was fantastic. It's funny as I've done a lot of research on Conduit and read like everything, and seeing you explain it like this, and instantly I was like, oh, that's what they're doing. It explains a lot. Seeing it visualized was fascinating to me. So I spammed it over in the Conduit channel, and multiple people instantly jumped on.
That's awesome. Yeah, no, but like, I think people are a little bit sleeping on this. And I know that Tashi and Conduit, we're not as big into building the hype in the crypto space. Now that's going to change for Tashi here pretty quickly. We just want to make sure that we've got certain things lined up before we open up that floodgate. And I'm sure Conduit's the same way. But I know like Conduit had their announcement with Kentucky. They're doing some things. They're doing some serious things, and people aren't paying attention to it. I don't know that they're getting as excited as they should be getting about it. Because what I see happening with DePIN, as I said in the very beginning, when I look at DePIN is a use case. We start with the use case. We start with the problem and we build the solution. So it's, I know Brandon would agree with this. When we're doing this, we're not going in and Jordan, thanks for joining. I'll see you next week. We'll do this one more time this year, and then we're going to take a break the following week. But thanks for joining, Jordan. But yeah, we start with the problem and then we build the solution around it. And now the trick is, Tashi's building a thing. Conduit's building a thing. GeoNet's building a thing. Helium's building a thing. Peak is building an entire platform for building things, right? And so the question is, how do we get all the things to play nice with each other? If we were in an L1, we just play through the dexes and the swapping algorithms and all that stuff when it comes on the economic level. But there's so much more to this. There's so much more on a technical level that we can do from integration. And that's why we've built our council, the Code Council, the Council for a Council of Decentralized Economies, Code, which is a number of DePINs that have come together and said, we're committed to figuring out how I've got this eTashi that is a stable coin of sorts. How do I benefit in the Conduit network from participating in the Tashi network? Or how do I benefit in the Tashi network by participating in the Conduit network? And there are lots of things we can do, both from a technological perspective of reselling each other's technology. I know with Aether, we're having discussions about how do we provide things like, virtualized gaming as a service in Tashi, right? And this would be an Aether offering, right? So I got to spell this right. Virtualized gaming. And that's an Aether product. And so now the question is, okay, cool. How do we compensate? And there are projects that have been doing this kind of ad hoc and peer-to-peer across the networks. But how do we create an economy where it's kind of organically baked into all of our networks? Yeah, go ahead, Deepin.
Yeah, to your comment about how people are kind of feeding on the hype, and I think the people are so used to in this space trying to get something for nothing. And now we have projects that have been developing for years, which are actual products and actual business models, and are about diluting value and distributing diluted value might be the better way to say it. They're about creating actual products and rewarding people for their contributions, and they have fair launches, and they're not about massive VC allocations and stuff like that. And it's a shock to people's system. So I think as we actually see DePIN products like Tashi and Conduit launch and real world revenue flow into these ecosystems, the hype's going to build itself. You know, the people that are on board early on and see the vision and go for it, I think they're going to be the guys that get rewards early on. It's not going to be the people that bought in through airdrops and stuff like that and fake advertising scams and stuff. So I'm really ecstatic to see what comes forward with both Tashi and Conduit. And the hype's gonna be there. So it'll be
Yeah.
there soon enough.
Well, and this is, I mean, I've been thinking about this even recently, and I've got respects for all ends of the spectrum for what they are, right? So when we look at like stocks versus meme coins, right? When you've got like blue chip stocks, you've got these, very reliable, slow growth but reliable, consistent stocks that you would put into a conservative investment portfolio, for example. That's on the far end. Maybe we can even say bonds, right? So bonds are on the far side. We're just basically banking on the entire economy when we think of bonds. As a matter of fact, let's go ahead and change this to bonds, right? So we have bonds way over here on the investment side. And then we have meme coins on the far opposite side. And actually, I'm going to put this, people may or may not agree with me on this one, but I'm going to say slot machines are slightly left of meme coins. So, so we got slot machines right there, right? And we have most of crypto is kind of living over on this side of that, right? And what I'm seeing is we've got a number of projects, we'll even say like DePIN projects that are probably on this side right here, right? And so the question is, as a as a crypto degen, where do I want to live, right? Where's my appetite? Am I going to be living way over on the meme coin slot machine crypto? And when I say crypto, I just say in general, if we think of like ICOs, ITOs, those types of things where you're basically doing crowdfunding on projects that I would consider high risk or a high likelihood of failure. And then you could even say, you know what? Actually, let's do this. We'll say DApp, and then we'll put DLT protocol, right? So we got DLTs. So you have DApps. DApps are a little bit more risky, while DLTs still can be risky depending on the project. There's always a question about long-term viability. And then DPINs are somewhere in here, right? So if we put stocks in here, right? Stocks are going to be over here somewhere. And stocks can be all over the place too, right? I mean, stocks just depends on the flavor of stock. But generally speaking, if you're looking at like an S&P 500 index or something like that, your stocks are going to be somewhere that's reasonable. It's going to have somewhere between a 6 to 9 or 6 to 10% return or something like that. And when you're over in the meme coin world, you're talking like you want a 10,000x return, or zero. Like, right, those are your options. You're either going to get a 10,000x return or zero. And the question is, where are we in this space? I think the challenge is when we have a lot of, we'll say the crypto degens, the people who are doing all of the hype building and all the discussion are over here. So we're going to put crypto degens. And I say that with all the love in my heart because I consider myself a crypto degen too, because I do all these things as well. I don't do slot machines, but I do meme coins sometimes. When we're talking to these guys and we're way over here, how excited are they going to be about over here when they're hearing about 10,000 or 50,000 X returns on a meme coin? Even if it's a 0.00001% chance, they're hearing about that. They're getting excited about that stuff. Why are they getting excited about a DePIN project? It's like, hey guys, we have a real value here and we're probably going to do better than stocks and bonds. There's a chance we do nothing, right? There's a chance all of these do nothing. But having that discussion with them and saying, hey guys, you guys should all get excited about this really cool project that's going to be stable. It's going to be around for a long time and has like probably a pretty good return. I don't want to make any promises about returns, but probably a great opportunity for most people. How do we communicate to those people? Because what we're not going to be able to do is talking to these guys, which are traditional investors. These guys kind of aren't super interested in anything on that side of the line, right? So really, we're talking to these guys and trying to get them excited about things that are closer to the line. Now, that being said, that's all about communications and messaging. I don't even want to go down that rabbit hole. But I think that's my point is you look at projects like Conduit, you look at projects like GeoNet. Like I love what GeoNet is doing. Look at projects like Tashi. I would say that because we are a use case, we start with the use case, we start with the problem, and we create the solution, and we're validating the solution against the real world demand and identifying some real business model and opportunities. Like there's a market there that exists for gaming that are already paying tens of billions of dollars. And all we're saying is, why don't you guys just pay less and come over, right? And that's our message at Tashi is like, just pay less. Now, obviously, we got some maturing that we have to do on the technology stack for mainstream to really adopt it. But that's all part of this. That's all part of the project, right? That's part of going from zero to mainstream adoption. But that being said, we're starting with that type of stuff. Rogue, I know you said disappointment is unmet expectations. To change expectations, we need to educate. That's right. That's 100%. And I'll actually say I'm seeing a lot of that turn right now. I'm seeing a lot of the crypto degens going and saying, okay, guys, we've been doing this for 6, 7, 8 years, playing with slot machines, NFT projects, all this stuff. I mean, just with the Hawk Tua girl, the Hawk coin, we saw what happened there. People are getting a little disenfranchised with this side of the spectrum, and I think they're looking more for stuff on this side of the spectrum. And I will say that with a lot of investors I'm talking to, so even when we talk about like institutional investors or funds or Web3 funds, we'll say Web3 funds, like they're really looking to be like right up against the line right now. There was a time when these guys were way over here in the DApp section. They Most of them probably didn't want to go hang out in the meme coin space, but there was a time when when these Web3 funds were living in the DLT DApp space. There are some DApps getting invested in, but it's very strict due diligence. The DLTs, there are some L1s and L2s that are coming out, but it's a lot harder to launch those than it was a few years ago. They really want those projects that, like DePIN, can demonstrate like real world market value. Some of the Web3 funds we've been talking to at Tashi have just been saying, cool, what's your revenue? What revenue commitments do you have? Who are your customers? Like they want to start talking about revenue right now when a couple of years ago, nobody was asking about revenue because this was so nascent. So I think that's what I'm seeing here on the spectrum here. I mean, feel free to disagree. Tell me what your thoughts are. I am happy to hear from um, other people what they're observing.
Well, I think like what we're looking at right now is kind of the evolution of it all, where we have uh, big brands starting a partnership with DePIN projects. Like was it Demo that just got a partnership with, or is it Natix that partner with Tesla? We got Geode partnering with everybody, it appears,
Yep.
and reducing the price of RTK for farmers and making a huge impact there. So I think we're going to start seeing that trend catch on. It's just people are just so after this illusion of 1,000x gain on everything they get into. And even deep in, they're like, oh, if I buy this $100 device or $300 device, what's my return going to be? And how early is it? Oh, it's not early. I don't want to get into it at all. So they're starting to look at some of these devices and these projects going, oh, the price to enter is $1,000, and they're freaking out. But look at the economy right now. $1,000 is nothing.
Yeah. Yeah, I think that's absolutely right. Is well, and I know that people are making those calculations right now. Even in GeoNet, I've had people do that calculation. I was like at what was it? Permissionless. Yeah, in Salt Lake City. I was at Permissionless in Salt Lake City, and I was talking to the GeoNet team there, and people were coming up saying, "Cool, what are my rewards? What is the current price of the token of the Geo token?" And they're doing the math. You can see them doing the math. Like, okay, if I buy this thing for $600, it's going to take me 3.5 months to pay this thing off, and then after that, I'm making 100 and something bucks, almost $200 a month, just free and clear after that. And so that's how people are thinking: is how quickly can I pay off my initial investment? And that's not a bad way to think.
Yeah,
Go ahead.
but the realization of a 100% return on investment in the first year is amazing. Like
Yeah.
people got to start grounding themselves back in the real world somewhere, because you invest in Tesla, you're not going to get 100 or excuse me, a 200% return, 100% return in the first year.
No,
So
absolutely
it's
not.
time to get grounded in the real world and start looking for tokens that are actually backed by real world value, and then anything on top of that speculative. So we actually have a true trade trading platform and analysis that we can actually look at that's based on actual annual recurring revenue.
That's actually an interesting point you're bringing up because, like, if we go and we look at coin market cap, I mean, let's just look here, right? We can see market cap, we can see volume. Like, where's revenue? Let's look at another project, right? Let's look at XRP, right? Cool. Where's revenue? There's no revenue metrics. And by the way, XRP has fees on their network, and so you can always ask the question of like, is XRP profitable? Is Ripple profitable from even a network maintenance perspective? But that's not something we're looking at on these, all right? We're just looking at the market caps here. If you go to any traditional investment, if you go to Yahoo Finance, every ticker you're going to look at, you're going to see what their quarterly reports look like. And for any publicly traded stock, you're going to be able to see what their revenues are and their earnings and all that stuff. So, um, but that being said, GeoNet has done a great job of putting their revenue on chain so that anybody can inspect it and see it. And I think that's the right way to start thinking about it. And we're going to get there, right? I think we've moved from this very highly speculative perspective in Web3, and there will always be people who want slot machine. They always are going to want meme coins, and that's fine. They're always going to want the high risk, high return opportunities. And even if you just think about the growth of this space and the potential growth, I think we're going to see a lot of like potentially high growth projects over the next few years. But at some point, we're going to have to come to reality, just like you're talking about deep in crypto, of people need to put this in perspective. Like a really good returning stock is going to be, 30% return. A good index, like a good moderately risky index, is going to be around 10%. But that's backed by revenues, quarterly reports and revenues, and things we can monitor and measure and see the longevity of it. And it's fine if you want to go to the casino and pull slot machines all day. I have nothing wrong with you guys going to do that. I personally am not going to do it because I'm risk averse to that type of stuff. But if you want to go do that and that's how you get your enjoyment and entertainment, go for it. And you might hit it big one time, and that's totally fine. But when we're talking about companies who are providing value to the world, we need to start thinking about what is the real value they're offering, and how do we measure value is what is the consideration that's offered in return, which is generally measured in revenue for a company, right? Revenue equals the consideration that consumers are willing to pay out in return for a service that's being rendered. And that's what we got to start to measure. So anyway, I'm really excited about the direction it's going. Deep in crypto, I'll give you last word here, and then I'm going to close down the stream. But thank you so much for joining. But I'd love to hear your final closing thoughts here.
I think 100% you're right. I think we are about to reach the golden era of Web3, and we're going to have projects that care about real world value and care about the business model which they're producing, and we're going to have transparency in a way that we've never had before, and we're going to have security, and we're going to have big corporations come on board and recognize that, hey, I can lower my overhead, I can earn some more revenue just by moving to these decentralized platforms, and I can stop having my platform and my information data breached every 30 days. So thanks for having me on, Ken.
Yeah, thanks for jumping on. And by the way, I do this. I try to do this every week, right? We haven't missed a week in the last 3 or 4 months. We're going to do next week, but then the following week, Christmas week, we're going to take a break. And then New Year's, we'll take a break. And then the following week, we'll be back. So we're going to take 2 weeks off of this stream. But next week, definitely join us next week. Tuesday, it's noon Pacific, 3 Eastern, 3 p.m. Eastern. I'm always going to post the Discord link if we're going to be doing this with Discord. I actually kind of like that because in that scenario, we can like have people jump in and chat, which is kind of like a mix between like StreamYard streaming and Spaces. If you want to join the voice chat discussion, jump into Discord and participate in the real time discussion. I love having more voices. Again, thank you, DePIN Crypto, for joining. And everybody, I will see you